Good afternoon, everyone. Nirmal sir, can we start?
Yes, we can.
Okay, thank you. Thank you. Good afternoon, everyone. On behalf of company, I would like to welcome you all Chembond Chemical first investor annual meet for quarter second and H1 financial 26. This meet is scheduled at 3:30 p.m. and will conclude at 4:30. Today on this meet, we have with us from the management, Mr. Nirmal Vinod Shah, Chairman and Managing Director, Mr. Vinod Deshpande, Executive Director of Chembond Water Technologies Limited, which is material subsidiary of Chembond Chemical Limited, and Prachi Mahadik, Chief Financial Officer of the company, and myself, Kiran Mukada, Company Secretary and Compliance Officer of the company. We will begin the meeting with a brief opening remark of Nirmal sir, followed by presentation on financial results. After the presentation, we will proceed to question and answer session. Participants who wish to ask a question through audio and video can do so by presenting the raise hand icon on the bottom of your screen and wait for your turn to speak. And participants who wish to ask question via chat can click on the question answer icon on the bottom of your screen and post your questions there. We request you to participate to keep their microphone muted during the opening remark and the presentation to ensure smooth and uninterrupted session. Please note that certain statements made during the meet may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause the actual result or projection to differ materially from those statements. Chembond Chemical will not be in any way responsible for any action taken on such statements and undertakes no obligation to publicly update these forward-looking statements. I would like to now hand over the meet to Mr. Nirmal Shah for his opening remarks. Thank you. Over to you, sir.
Yes, hi, good afternoon, everyone. I'm very glad to be here, part of this first investor call being hosted by our company and many of you being shareholders, your company too. Without really spending too much time on my introduction and everything, I think we would like to spend as much time to walk you through the financials as well as give you an overview of what Chembond does, and then leave some more time for Q&A. So without really getting into too much detail, can we start our presentation, Prachi?
Good afternoon, all. I hope I'm audible.
Yes, you are.
Thank you, sir. So myself, Mrs. Prachi Mahadik. Good afternoon, all to all investors, management of Chembond, Kiran, and everyone present over here. I'm the Chief Financial Officer of this company, and I'll be now presenting the key highlights of this company, which would include the overall performance, including a comparison with previous quarter and corresponding period of previous year. So I request Kiran to share this presentation. So this being our first investor meet, I would like to give you a brief introduction on Chembond Chemicals. So starting with a snapshot slide on Chembond Chemicals. So brief introduction. Chembond Chemicals was founded by Dr. Vinod Shah, and we completed 50 years in this year in 2025. Our employee strength in Chembond on pan-India basis is 950 employees on payroll. And last year, that is financial year 24-25, our consolidated total revenue stood at 290 crores. Last year, we completed demerger of our construction chemicals and water treatment business chemicals from Chembond Chemicals Limited. That was the earlier name, which is now Chembond Material Technologies Limited. Chembond Chemicals Limited is listed on both stock exchange, National Stock Exchange and Bombay Stock Exchange. And we have our head office in Navi Mumbai, Maharashtra. We have 3 plants, that is our manufacturing locations, and they are at Gujarat, Himachal Pradesh and Tamil Nadu. Moving to next slide. Our board of directors, these are our board of directors for Chembond Chemicals Limited. They include renowned names.
Okay.
Request participants to mute your, okay. Board of directors include renowned names from various industries. We have from chemical industry, marketing industry, finance and legal. So these are our board of directors. Coming to our core values, we in Chembond strongly believe in these following core values. So customer centric, that is we are customer focused. So customer first is the main core value to start with, and then it is grow as we grow. We are setting higher standards for our products, for the services which we render to our customers, and customer satisfaction is of prior and utmost importance. Is the culture what we follow here, followed by partner driven mission, harness the power of innovation and supplier of choice. So the objective is to become the supplier of choice for our customers. So these are our core values. Coming to our segments, our business in Chembond Chemicals Limited is divided into these 4 segments: water technologies, construction chemicals, cleaning and hygiene, and distribution. Water technologies constitutes the major business, followed by construction, then distribution, and then cleaning and hygiene. So now we move forward to each segment what we have, and starting with water technologies, which is constituting to around 85 to 87% of our total business in Chembond. So here in water treatment, water technologies, we are into chemical solutions. We are into wastewater remediation. We also provide equipment solutions, and we provide technical services, that is online monitoring. And we have a dedicated team providing these services at our customer site for the water treatment chemicals what we supply to our customers. These are our chemical programs. So cooling water treatment, boiler water treatment, raw water clarification, and effluent treatment, foam control. So these are our chemical programs what we do in water treatment chemical business. Coming to next slide, these are the industries what we serve in water technologies. So these are the various industries wherein we supply. Our customers are based from these industrial segments. So, yes. So coming to financial performance for water business unit and talking about revenue, here in this slide we are comparing half year. So half year current financial year, that is April to September 2026, as compared to half year April to September 2025. So in half year 25, we were at 116.9 crores as against 120 crores in current half year. So here we are up by 2.65% in terms of revenue. This is on account of strong order booking what we have received in current financial year. Also, we have a healthy inquiry pipeline which is ongoing. We are seeing stability in our supply chain, and equipment and system deliveries are also on schedule. So we hope H2 would also be growing at a steady rate. The next comes our construction chemical industries. So in construction chemicals industry, we are into the following products, starting with admixtures, which is for concrete modification, which is used in road projects and infrastructure projects. Then we have sealants, we have waterproofing, we have repair products, we have curing agents, grouts, and tiling adhesives. And the customer segments what we have in construction chemicals are roads, industrials, and consultants, applicators on a majority, followed by others like metros, bridges, dams, and builders, where we provide our material, our admixture and sealants are provided in this category of customer segments. Construction chemicals as a business unit, revenue performance over last 5 years and current half year, that is financial year 25-26. So here if we see there is a steady growth from 22 financial year onwards till date. So if we see from 21.4 crores in financial year 23, we have moved upward to 24 crores, which is around 12% growth. And from 24 crores, we are at 28.8, that is 29 crores, which is around 20% growth over financial year 24. This half year, financial year 26, we closed at 11.2 crores, and we hope that the second half, that is H2, would be performed still more better. So this first half year, that is quarter 1 and quarter 2, the sales are mostly affected by monsoon. Prolonged monsoon had affected our sales, but the trend is now on a growing side. So we hope H2 would be much better than H1. Coming to our next segment, that is cleaning and hygiene. So here in cleaning and hygiene solutions, we are having a joint venture with Chembond, which is a German-based company. And here in cleaning and hygiene, our products are our products and systems are for industrial applications and institutional applications. For industrial applications, we are into beverage, food processing, dairy and brewing industries. And in institutional applications, we are in kitchens, laundry and housekeeping departments. In terms of revenue, cleaning and hygiene is on a smaller scale, but yes, we are expanding in this area too. So these are the customer segments what we have in cleaning and hygiene. So mainly it is food processing, dairy and beverage, followed by kitchen, laundry and housekeeping. The next business unit what we have is chemical distribution. In chemical distribution, we import stock, and that is specialty chemicals is what we import and we sell here in domestic market. So these products are additives which are mainly used for water treatment chemicals, for construction chemicals, and also polyurethane for primers, sealants and coating. So these are the products what we import and sell here in domestic market from this Chembond Chemical Distribution Division. So these were the business units what we operate in Chembond Chemicals Limited. And coming to now the financial information, that is consolidated information on all these business units taken together. We'll first have a look at quarterly financials and then we'll move on to half-year financials. So quarter 2, 25-26, our total consolidated revenue was at 73.04 crores. It was down as compared to quarter 2, 24-25 by 3%. So this down was account of construction chemicals, distribution and cleaning hygiene showing a downward trend. However, water technologies grew at 4%. But construction chemicals, yes, because of monsoon, sales could not pick up, which would not be the case now starting from September, October is the trend what we are seeing. For quarter 2, 25-26, our consolidated EBITDA was at 11.08 crores, which was up by 14% as compared to quarter 2 of last financial year. EBITDA increased on account of good gross margins what we had and improved cost optimization. Our consolidated PBT for quarter 2 25-26 was at 9.62 crores, again up by 6% as compared to last quarter. So improved margins were on account of lower raw material cost and new product technologies which we brought in. And our outlook remains positive across all business units, that is construction, chemical, distribution, and cleaning and hygiene. This is a track record of revenue on quarter basis. So starting from quarter 4 of financial year 23-24 and moving till quarter 2, 25-26. And we have highlighted quarter 2 comparison, that is quarter 2 of current financial year versus quarter 2 of last financial year. So we see there is a growth, so there is a fall from 75 to 73.04 crores. So marginally the revenue is down, but we hope this would improve in quarter 3 and quarter 4. Coming to the profitability of consolidated financials quarter-wise. So from quarter 4, 23-24 again to quarter 2, 25-26, the trend is as shown in the bar diagram. And if we compare current quarter 2 financial year 25-26 with quarter 2 of last financial year, we see an improvement. So our EBITDA for quarter 2, 25-26 at 11.1 crores as against 9.7 crores and PBT at 9.6 crores as against 9.1 crores. So improvement over last year same quarter. Quarter 2 financial year 25-26, some few key financial data points. So here we are comparing our current quarter, July to September, as against quarter 1, that is April to June of financial year 25-26, and the change in terms of percentages over both the quarters. So starting with operating income, for quarter 2 at 73 crores as against 65.4 crores in quarter 1. So you see the change is around 11.7% in operating income. Our operating EBITDA at 10.7 crores as against 8.4 crores in last quarter 1. So EBITDA has improved by 26.3%. In terms of EBITDA margin, our margin for quarter 2 at 14.6% as against 12.9%. So it has improved by 169 basis points. Our profit after tax at 7.2 crores as against 6.3 crores, an increase of 14.7%. And profit after tax margin in terms of revenue is at 9.8% as compared to 9.6%. So 26 basis point improvement. So quarter on quarter comparison, we see there is a growth in terms of operating income. There is an improvement in EBITDA. Also, there is an improvement in profit after tax. Coming to half-year summary for Chembond Chemicals Limited on a consolidated basis. So our half-year consolidated revenue stood at 138.40 crores. It was lower by 1% as compared to last half year. So this marginal decrease was on account of construction chemicals and distribution business unit going down. So construction chemical was down by 6% and distribution by 30%. But yes, we expect in Q3 and Q4 these segments would go up. Water technologies was higher at 5% as compared to the budget what we have, and cleaning and hygiene was also up by 3%. Our half year EBITDA stood at 21.89 crores, which was higher by 15% as compared to last half year. And our PBT stood at 19.42 crores, again higher by 13% as compared to last half year. So higher in EBITDA and PBT is mainly on account of improved margins because of lower raw material cost and the product technologies which were introduced in these half year. And the revenue outlook remains positive for all our business units. This is a revenue comparison of the business units what we have. Half year comparison, that is half year financial year 2024 as compared to half year financial year 2025. So segment wise, water technologies is the highest, contributing to 87%. In last half year, it was 84%. So the share has increased from 84 to 87%. Cleaning and hygiene remains same at 1%. Distribution share has come down from 8% to 6%. And construction chemical share has come down by 1%. It was 8% in half year 2024 and now it is 7% in half year 2025. But we expect these businesses to grow and H2 would be higher share for these segments. This is half year cost and expenses. So again a comparison of current half year versus half year of last financial year. Our cost of goods sold for last year was at 56%, which came down to 54%. Our employee cost has increased from 21% to 23% and other expenses remain same at 23%. Key financial highlights for half year. So half year April to September 26 as compared to half year April to September 25 and the percentage change in both the half years. Operating income is flat or marginally down by 0.7%. EBITDA for current half year at 19.10 crores as against 15.30 crores. EBITDA has increased by 25.3%. Profit before tax at 19.4 crores as against 17.1 crores. Profit before tax has increased by 13.2%. And profit after tax at 13.5 crores as against 12.3 crores. So there is an increase in profit after tax by 9.8%. So key financial highlights on consolidated financials. Year-on-year comparison. So last slide was on half-year comparison. Here we have compared financial year 23-24 as compared to 24-25 and the current half year which we have just now ended. So from financial year 24 to 25, you see there is a revenue growth from 283 crores to 292 crores. And current half year, we are at 138 crores. Operating EBITDA for financial year 24, we were at 42 crores. It remains same at 41.9 crores for current financial year. And this half year, we are at 19 crores. Profit after tax, from 30 crores, we have increased to 30.9 crores, and now it is at 13.5 crores for this half year. And if we have to compare it as a percentage to revenue, our EBITDA for half year financial year 26 is 13.8% of revenue, whereas profit after tax is 9.7% of revenue. So our water business unit, we have a strong order book as mentioned in my earlier slide also. In construction chemicals, yes, our quarter 1 and quarter 2 were slow, and it was because of the prolonged monsoon. But however, we are seeing the activity is taking up. So from September onwards, we are seeing a growth in construction chemical business. Our material cost, our gross profit margins are stable. We completed our merger activities in this financial year, in last financial year. So all the post-demerger compliances are on track now, and all the records are being updated at various units and also at income tax and revenue department. Our EBITDA improvement is expected now in this half year with an increase in revenue is what we foresee for water business unit and especially construction chemicals unit. So that is all from my side. Thank you all.
Thank you, Prachi, for walking us through the financials. Appreciate the patience with which you've done that. We'll open the floor for questions.
Thank you, sir.
Yes, Kiran, you can queue up.
Yeah, yes, sir. Thank you all. We'll now begin with the question and answer. We request you participants to keep their questions concise and complete them within 2 minutes to follow the timeline.
Yes, Mr. Madhur Rathi.
Yes. Hi. Thank you for the opportunity. I wanted to understand our revenue is stagnant in the 280-290 crore range for the past 2 years. And even the H1 seems to be quite flattish versus what we have done historically. So what are the reasons in scaling up our business? And when we say that we have a very strong order book in the water treatment chemical segment, but we have grown only 4% in H1. So if you could just help us understand what kind of growth can we expect from this segment and on a business as a whole going forward?
Yes, thank you. So we have with us Vinod Deshpande, who heads this business and runs it. Vinod, can you please take this question?
Yeah, thank you. Thank you, Nirmal. Yeah, Mr. Madhur, your observation is very valid. One of the reasons for flattish growth in the first half of the year, we have something called summer chemicals which go to some of our customers, and those go into volumes. So this year, unfortunately, because of the prolonged monsoon, the summer chemicals could not be sold. So that's the gap that is found wanting there. As far as the order booking is concerned in the water business unit, we have almost 100 plus CR of new order book, which is apart from our regular business. So that's this order book, more or less, would be invoiced 50% of them in third and fourth quarter. I hope that answers your question,
Yes.
Mr. Madhu.
Yes, sir. Sir, and regarding the flattish revenue for the past 2 years, so what are the constraints in scaling up our business? Because we haven't been able to surpass the 300 crore revenue levels. So on that front.
So on a consolidated level, yes, we have other businesses also, which contribute to the consolidated turnover of the company. We have had more or less a flattish even in water business in the past 2 years. I don't know really whether it was because of the industrial slowdown. Some of the plants that we were treating did not really continue working, especially like IOCLs, which caused some of the business drop for us in the last year and even during the first half of this year. So that is one of the reasons that I can immediately see. Second is that there has been a sluggish growth on the industrial front in which we operate. Some of the projects have been delayed quite a lot, and we could not invoice those projects, which are getting invoiced slowly this year, especially in the equipment business. So these are the couple of reasons that we see about the sluggish growth in the last 2 years.
Okay, thank you.
Right.
Mr. Varun, please.
I had a fall. I'll get back into you.
Hello, hi, am I audible?
Yeah, yes.
Hi, sir. Sir, in our water business, we have these different verticals, which is the chemical solutions, equipment solution, wastewater remediation and services. Could you sort of give us a breakup of like where the majority of our business comes from? Is it from the EPC side or is it from the chemical side? Hello?
Yeah.
Yes, could you please repeat your question? I couldn't get it.
So, sir, in our wastewater, in our water treatment business, in our water technologies business, we have these different verticals, right? We have the chemicals business, and then we have the equipment solution, which I believe is it an EPC type of business?
It's not exactly EPC type of business. In our equipment division, we do applications like dosing systems and chlorine dioxide generation majorly, and some of the side stream filtration units that we build. Basically, we get aligned with the EPC contractors like Paharpur, Hammond, L&T. They have the major chunk of the EPC business, and we supply something like side stream filters or dosing systems to them, to the customers.
Understood, sir. So it is a product type of business, right? Not a EPC business.
No, it's not EPC.
Okay. And sir, how much of our water solution business actually comes from the chemical side of the business?
90% of our water treatment business comes from the chemical side of the business.
Understood. Understood. Also, sir, now when we look at, you're saying that we have a healthy order book, sir. Could you sort of quantify that? What kind of order book are we currently looking at?
Yeah, I already said that we have almost 100 plus CR order book, which includes chemical as well as equipment. Almost 85 to 90 CR is in the chemicals domain, and 10 to 12 is in the equipment domain.
Understood, sir. And sir, how much time will it take for us to supply this order book?
So basically, these are bulk orders in chemicals, and they are 1 year order, but these orders have been closed in the second quarter, some of them in the first quarter, but many in the second, and a few have been closed just in the last couple of weeks. So they run through the year. So that's how we look at almost invoicing almost around 40 to 50% of this order within this financial year. As far as equipment goes, equipment projects are subject to the vagaries of the project itself. Sometimes they extend as much as 2 to 3 years as well, because of the customer end delays.
Understood, sir. So, but most of this order book, this 100 crore order book that we are saying is outstanding, right? This is not something that has been executed already, right?
No, no, no.
So this 100 crores that is outstanding, we expect all of that to come in this year only. That is the second half.
Let me correct myself. Part of it has been already invoiced, but it's a very small part of this order book.
Yes, sir. And so basically, let's say it is about 95 crores or so. All of that we expect to come this year only in second half?
No, I already explained to you. Almost 40% of that total will be order book would be invoiced this year, 40 to 50%. So almost 100 CR what we have, we expect to book from this new order book, almost 40 to 45 CR.
Understood. Thank you, sir.
Okay, thank you, Varun. Mr. Ritesh?
Yeah, am I audible?
Yeah, yes, please.
Yeah. Sir, again, to continue on the water business only, is this bioremediation business, or is it now more of a synthetic chemicals?
Nirmal, would you like to take that?
Yes. Ritesh, thank you for your question. So I think there's a little bit of a confusion. So I'll just give a little context. So the water technologies business operates on 4 fronts. One of them is supplying chemical solutions. So cooling water treatment, boiler water treatment, products for treating RO membranes, flocculants and coagulants to treat raw water and wastewater. So it's these kind of chemical solutions. The second leg on which we're moving up is on the systems and the equipments business. So we are in a small to mid-size systems range, which are RO plants, DM plants, MB softeners, and things like that. And in the equipments, we have customized solutions, which are chlorine dioxide, which is an oxidant and a biocide in water treatment. So that's a space that we've started scaling up. And there are dosing systems and equipment scales, which are used in any chemical or fertilizer or power plant to feed various chemicals into the water. So this is the equipment leg of our water technologies business. In bioremediation, we are looking and working with live microbial cultures and some enzyme formulations, which are used for, remediating wastewater, and also for some of the other institutional type of applications. And the fourth leg is our monitoring and services. So we have an online monitoring system that is plugged into a customer's water loop, and it constantly monitors and feeds data into a cloud and gets analyzed, as well as if the customer so desires, it also controls their chemical feed rate. So depending on the variations in the water quality, it would adjust the flow of the chemical used to treat the water. So these are the 4 main areas of water technologies for us. Of these, the chemicals business has traditionally been the largest. In fact, it used to be 100% of our business about 10, 12 years ago, and now is down to about 80-odd%. The rest coming from the other 3 domains. Within the chemicals business is usually it's a evergreen type of business where we have annual contracts or multi-year contracts that run. 30 to 35% of the business is on tenders and bids, so it's to PSUs and some very large corporates who would prefer to bid out every 2 to 3 years, invite bids, and then do a competitive bidding process. Most of it is a retention type of business because the customer spends very small amount on water treatment, but if it's spent not too well and there are problems in the water loop, it can cause huge downtimes and profitability loss for them. So they don't want to tweak and play and work with, unknowns. So that's where the attrition rates are very low for us in this business. So the chemical business, usually we would see year on year, renewals happening. It's a consistent line. And the tender business, which is out to bids, those become subject to our competitors, how desperate they are to grab certain pieces of business. So sometimes we can retain them, but if the margins dip too much, then, we cannot match those rates. And as a result, we lose some business. So that's why we see that this business, though we see the potential seems to be very large, addressable market for us is in the specialty chemicals. We don't do resins, we don't do some basic chemicals. So it's a little smaller piece of that. And within that, every year there's at least about 30% of our top line, which comes up for, competitive bidding year after year. So the growth rates to maintain those, and even if we do retain in competitive bidding, it generally is an attrition on our margins, which we make up with new business addition and with new product technologies with better margins for us. So this is how the water business is structured. Would you like to know anything more specific on this?
Sir, it's a very good explanation. Could you also explain your equipment business, because I think it's a bit new for us. Also, is there any manufacturing capabilities or is it a pass-through business, and what is the scope of your engagement in this equipment business? And is this equipment leads to the more consumables from our side? What is the overall plan, if you can elaborate on that?
Great. Yes, I get your point. So our equipment, yes, a lot of it, our strength lies in design engineering. It lies in assessing the requirements adequately and being able to, fulfill the customer requirements. So being approved with all the key large industrial organizations, we automatically get an opportunity to bid. A lot of the bids are put through EPC contractors, and we are also registered with all of those. So say a Paharpur or a Hammond or those kind of larger companies, or BHEL, when they bid to set up plants for their customers, they already have us enlisted as a vendor for those kind of systems. So the inquiries come in, and a lot of times it's all of them who are bidding for the same project. And then once it's, they are successful, then we start working closely with them on the detailed engineering. Most of the components are bought out. So we, outsource a lot of those vessel fabrication, piping, etc. But we get them to our plant, we assemble them, we test them, we subject them to all kinds of quality assurance processes. And then once offered to the customer for final inspection, we dispatch them out. So these are dosing systems. So it would have a storage tank, it would have dilution tanks, it would have agitation, it would have mixing, and then it would have feeding. So dosing that chemical into the water stream. The other line is the generators. So the chlorine dioxide generator is a very sensitive piece of equipment. And we have to be very careful because it's a highly, it's a explosive type of chemical. So we have to be extremely careful with its design, and all kinds of safety interlocks have to be in place. So again, in that we have some of the references for amongst the largest plants that have been supplied in the country. So that makes us eligible to, get into all segments. Your third question was related to whether this can also lead to some follow-on sales for us. Absolutely, it does, because if we've supplied this piece of equipment and it's a new plant that has started up, we also get a first fill from our side. So even the chemicals that are used are usually, supplied by us. So in that duration, we get a good opportunity to understand the customer systems and are able to be better prepared for the following, bids that come out. So that's how things are structured.
So what's the typical order size of this equipment business?
Yeah. It ranges, Mr. Poladia. It ranges. So we don't distinguish between
Okay, thank you. Mr. Vedant Shah.
amount of effort that goes in. That might vary, but all of it is addressable. Yeah. There's a question, Surbhi, you have unable to raise your hand. Can you please pose your question?
Hello? Hello?
Yes, Surbhi? Yeah.
Yeah, no, this is Vedant. This is Vedant Shah. I thought we were asked to ask some questions.
Oh, okay. Okay. Okay, go ahead.
Sure. Yeah, sure. So in most cases, when, companies merge and, demerge, etc., the idea is always probably to better focus on few segments for higher growth. I'm presuming that we've gone through this exercise of a, demerger and separate listing, etc., from a perspective of, getting more growth and getting more focus on the businesses. Coming to the main, water technologies, again, exciting area, requirement across industries seems to be there. Just a simple question, what will it take for you to really become 1,000 crores, turnover company in this? What are the stumbling blocks? Are we really addressing them? Is there a desire to grow to that extent? So on and so forth. So if you could just throw some light on that.
What a wonderful question, Vedant. Yes, to be absolutely honest, we went through this whole rigmarole and hassle of this demerger because it's not an easy process. And unless we were very, aspirational and in it 100%, we would not have gone through the pain and the cost. So yes, to have a direct answer to your question, yes, we definitely are in this for growth. Second, what it would take to get to, say, like 1,000 crores, yes, it's not so easy because we would have to do a multiple, of things. We would have to look at inorganic ways to grow. We would have to look at diversifications. We would have to, of course, be able to have phenomenally lower cost year after year so that we can still beat the lowest competitors. So, and grow into our construction chemicals and the cleaning and hygiene, which are very small businesses. And the construction business, we were slow because we wanted to be very, very tight on the bottom line and the credit, quality. So I think the industry itself has consolidated the type of contractors and construction companies. Now, we have many good, large-sized, well-organized, better-paying contractors, thanks to the explosion in the NHAI activity as well as the metro activity. So that market we see now as a point of, we need to start getting back into the sales momentum in that business. So we're going to be focusing on that. In distribution, though it may seem, a trading type of business, there are many industry-specific constraints that came up because commoditization of certain products that we were doing for a few years, we pivoted into a totally new basket and are adding more unique products into our basket. So that sales for 1 year, we expect it to be a little depressed, but it will come back very healthily in the years to come. Internally, we're looking at about 4 years odd to hit 1,000 crore milestone. How well it gets achieved, of course, there are a lot of external factors, but we hope to be on course to get there.
Understood. So 1,000 crores in 4 years from a consolidated perspective, which is still a very, very healthy growth rate. I have just 1 or 2 follow-up questions. Within the water technology, which is almost 80-85% plus revenues of ours, besides competition, what else, how do we differentiate? Where are we versus competition where we have an advantage over the others? Is it the complexity of the chemical that we make as a specialty one? Is it our experience? Because the space is huge, the opportunity is huge, and
Yes, it is. It is very much in the way we apply our products and the relationships and the knowledge that we bring into a customer. We've been in this business for over 45 years, and that's something that every customer values, because there's not a single situation that, somewhere down the line we had earlier on in our, product life cycle or service life cycle not encountered. So that's a new thing. Even in the water space, there are a lot of new industries that are coming up into India, the electronic manufacturing, semiconductors, the solar panels.
Yeah.
So we're happy to say that, we're supplying to amongst the top two lines for making solar panels in India. So we've been there. The latest, the copper plants, those also are with us. So there's a lot of activity in that, a lot of data centers. So we've also started doing business with the data centers. So we are keeping pace with the developments, but competition is doing its work too. And there are many small startups, people who leave larger companies, can do small things on their own. And they end up spoiling the market because they break pricing, they don't deliver service at that level, but then the customer's expectation is that everybody should supply them at this price. So those are in any business, those situations are there, but our job is to look beyond those and keep delivering a healthy bottom and top line to all our stakeholders. So we'll keep doing that. I think there's only about 7-8 minutes and a lot of people yet to ask questions. Can we move on to the next question, please?
Sure.
Yeah.
Thank you, sir.
Ms. Surabhi, please.
Yeah. Hi. Thank you for taking my question. How do you see the growth in the water business from a next 2-year perspective? Could you just elaborate a bit on that?
Yeah, Vinod.
Yeah, see, the water treatment specialty chemicals business, if you look at the entire market within India, is almost around 9,500 crores, that is $1 billion. And the recent study and research shows that this would grow at a CAGR of 5.2% for the next 5 years. But the area in which we operate, the domain in which we operate in cooling water treatment and all, the space is around 1,500 to 1,600 CR right now, and this would grow at a pace of around 7 to 8%. The major growth in water treatment chemicals is happening in water treatment polyelectrolytes like flocculants and coagulants, along with RO chemicals, followed by corrosion inhibitors and anti-scalants. So we see a steady growth of 7 to 8% in the market, but we would probably grow at a rate of 10 to 15% year on year.
Understood. And sir, if I'm not wrong, correct me if I'm wrong here, margins have been in low teens. Is there a scope for margins to improve from here on?
We are striving to improve our margins on a continuous basis, but as Nirmal already explained to you, there are so many small players now in the market, people who moved away from multinationals or even Indian bigger companies starting their own startups. They continuously keep on breaking the price in the market. So we need to keep on competing with them also. So the margin pressure is always there. But at the same time, we have been quite successful in maintaining our margins or improving them slightly. As you already seen in the presentation that Prachi made on the financials. So our top line was stagnant, but our margins have improved. So we keep on doing our thing to keep the margins in a respectable number.
Understood. And just to follow up here on what percentage of our water business comes from the tenders, and also again, just slightly bit on the margins, what do you think would be the sustainable range in this business?
Now, I think Nirmal already answered this question on the percentage of business that comes from the tender business. Almost around 35% of our business comes from the tender business. Margins, yes, we are working in the range of 8 to 10%, and we would continue to try and improve those margins.
Understood. And this is one last one in the construction chemical space. What is our right to win, and do you think that there is any synergy with our water business?
Nirmal,
Yeah.
could you take this?
Prachi, yeah. So our CFO,
Hello.
Prachi, also doubles down as heading the construction chemicals business. She has spearheaded the improvement in the bottom line as well as holding a tight fist on the credit. So I'd have her, share her views.
Yeah. Thank you, Nirmal. Can you come back with your question, please?
Yeah. So since our construction chemicals business is a small part of our business, I wanted to understand what's our right to win, and do we have any synergies with the water business from a focus perspective on this particular segment?
So yes, right to win. We were earlier focused mostly on the creditworthiness of customers and maintaining margins. So currently the focus would still remain the same. But now construction chemical industry is dominated by both organized and unorganized players. Organized players are growing and unorganized players are also there. Their presence is felt. But we are concentrating more on high performance admixtures and sealants. So these are the two products, and also tiling products is what we are seeing the demand would grow in these product sectors. So this is the main area wherein we are trying to pitch ourselves, and we would see an increase in sales for our construction chemical division in coming half year and coming years to go. So that is the strategy what we have adopted for construction chemicals. And about synergies with water treatment, yes, there are few customers who are into both the segments like water treatment and construction chemicals. So yes, the same customers can be. Hello, am I lost? Hello.
Yeah, you're audible.
Yeah,
You're audible.
yeah. So the customers are same for, in few of the cases, they are same for water treatment and construction chemicals. So we would try to align those customers and try to increase our customer base for construction chemical industry as well.
Understood. Thank you so much for taking my question.
Yeah. Our last participant, Mr. Samarth. Hello, Mr. Samarth.
Yeah. Thank you for the opportunity. My first question is on our wage costs, which are about 20% of revenues. I believe you mentioned there's a certain service aspect to our business. Could you just help explain that, please?
Yes, I'll be happy to take that question. So our business is more of application of our products. It's not just about supplying the product. So we do have very large sites on which we have to deploy our team members to monitor the treatment, to also give extra value-added services like water analysis and field control as well as reporting. So these at one of the largest sites that we do, we have more than 40 people on site doing round-the-clock monitoring. So things like this. As a result, we have a very large, requirement for people. That's one of the reasons. And of course, more recently, for a growing business and a complex business, we also need capable management bandwidth and team members who understand this and come with experience. So those also are, not usually very cheap. However, we've been in this range for a long time, so it's not something that we've been out of the orbit on that, percentage to sales basis.
And this is the deployment of individuals at the plants for your customers. Is that for the contractual business, or that happens for the tender business as well?
For all, because the bid would say that, that we need to have round-the-clock monitoring. And so sometimes the bid specify what type of people and how many we need. We also have some O&M contracts, so which also means that we have to deploy people to just operate and maintain water systems. So it's usually spec'd in by the customer for bids. And in private segment business, it's, we optimize those to the best possible extent.
Gosh. And you mentioned O&M. So I think in the past we mentioned that as a growth opportunity where customers are looking to outsource the whole O&M for the plants. So any updates on that? Have you seen growth on that? And does that come under chemicals or does that come under the other two segments that we?
Yeah, it's within the water BU, and I think in the last about year that we started focusing on, a year and a half ago, we started pushing this. In this period, we've added at least 6 sites where we offer comprehensive O&M services.
And margins for the business will be similar to the water BU margins?
It wouldn't be like the product supply margins, but it does give us some, allied advantages because we're able to understand. So sometimes it's also to, understand the water system that we would enter and then continue to gain insights and offer a more optimized treatment solution to the customer.
Okay. And
builds relationships also.
Got you. And you've given us, the main industry you focus on, but is there a split you can give in terms of, just for the water BU, for, between fertilizer, cement, etc.?
We can put that together and be better prepared for next time, but I would think that it's about 65% or 60 to 65% of the fertilizer water treatment business is with us. But we'll have to really break it up into as a percent of overall market size where we stand. For all
no, I meant in terms of our revenue, sort of the 250 odd crores of revenue we have in the water BU. What percentage is from the fertilizer space? How much is from cement?
Okay. No, so we divide them into 4 core areas. One is chemicals and fertilizer, other is petrochem and refining, the third is steel and metals, and the fourth is all other business. So these are the 4 segments. So currently I would say that almost about 30% would come in from the fertilizer space, 50 odd from the petchem and refining and chemical, so that zone, and the rest from the metals, and about 8 to 10% from other industries.
Got you. So last question from my side.
Okay.
Conservatively, the cash flow from operations that we expect for the year and use of that cash.
Okay. Nirmal sir, time is constrained, so I think I request you to please conclude with remarks.
Okay. Yes. I think we've tried our best to get started with an investor and community interaction. It does, before this call, we weren't sure how it would go. So now we get a hang of what kind of questions there are, and it'll help us better prepare for the next meeting. We intend to have these twice in a year. So this is for the half year, and we intend to also have one later on towards the financial year end. So with this, thank you all for taking time out and joining this call. And to my colleagues, thank you very much for preparing and trying your best to answer the queries.
Thank you. Thank you all.
Thank you. Thank you very much.
Thank you. Thank you everyone for joining.
Yeah.
Thank you, Nirmal. Thank you, Prachi.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.